I'm Nick Grove for the Morningstar Individual Investor Conference in 2014, and today I'm joined by Morningstar's Chris Galloway. Chris, to put it mildly, we've seen a bit of volatility in the markets recently. Can you just give a brief explanation of what's behind this volatility?
Sure, Nick. Look, it's very difficult to say with any level of clarity, but it's something that came around predominantly in September in equity markets, where we saw a downturn in equity markets. Look, I don't necessarily think that it's recent volatility that's a concern. I think it's more expected. We have a global economic environment that is very, very uncertain, generally speaking. So I would actually say that the volatility we've seen more recently is probably more normal. And it's in fact the low levels of volatility that we've seen for the last 2 or 3 years, in fact, that have probably been a little bit unusual. So always difficult to say exactly where it's coming from, but there's a number of events happening globally. There's uncertainty about obviously the economic growth scenario in China. There's uncertainty and conflicts in Europe and in Eastern Europe in particular, in the Middle East. So any one of these events, in and of themselves, could generally result in volatility. So not surprising to actually see it, some level of it coming back into the markets.
And Chris, in your presentation, you spoke about the threat of deflation in Europe and increasing global debt levels. How seriously should investors be taking these challenges?
I think the levels of public debt, government debt, are very, very significant. As I mentioned in my presentation, particularly in Europe, a sensible level of sort of debt or government debt, public debt to GDP is around about 60%, and most of the governments in Europe and indeed outside of Europe are very well ahead of those levels. So there's a high level of debt. Deflation in Europe is a real problem. I mean, we've obviously seen the scenario of that in Japan, where we had a deflationary scenario. You, in effect, ended up with almost 2 decades of lost growth in Japan. There's a possibility that that happens again in Europe. So the implications of that, of course, for investors are that you would expect monetary stimulus in terms of very low interest rates in Europe, together with perhaps some more extreme versions of monetary stimulus like quantitative easing. That's likely to happen inside Europe, in effect to really try and stave off any possibility of that deflationary spiral continuing.
So Chris, just finally, with global growth under pressure and with stretched valuations across most asset classes, how are you and your team positioning your portfolios?
Yeah, Nick, it's that's exactly how we see things. I think in times when interest rates are very, very low, you will generally find valuations for most other asset classes being very, very high. Those valuations will only remain high if interest rates are likely to remain low. And while that's likely to happen, as I just mentioned, in Europe in particular, that scenario is changing in the United States in particular, where we have interest rates moving upwards. That's going to start changing the dynamic. I guess in this particular environment, your options really are: you can stay invested in cash, or you can continue to buy these overvalued assets. We would advocate that, look, it's a time to probably just be more defensively positioned. Cash is not a bad asset class at this point in time. Yes, it's not exciting, but it will preserve your capital. Within regions or equity market regions, there are some that offer better value than others. Japan, Europe are more compelling, we think, than the United States. And then I think from an Australian perspective, we favour Australian property over Australian equity, relatively speaking, and that's really for those companies where you have a nice sort of rental income stream that is sort of accruing to sort of commercial property. The final thing really is foreign currency exposure, so offshore exposure as opposed to the Australian dollar. So despite the fact that it's a difficult time, I think, for investors, there are always relative opportunities and ways that you can allocate your money.
Chris, thanks very much for your time today.
Thanks, Nick.
I'm Nick Grove for the Morningstar Individual Investor Conference in 2014.